With that said, I want to turn it over now to our co-host from today. This is Courtney Buchan from GRS Community Management, who will then introduce our main event instructor for the day.
Thanks, Jeff. Hi, my name is Courtney Buchan. I'm the corporate trainer for GRS Community Management. I'm also a licensed community association manager and board member myself. A little bit about GRS real quick. GRS, we've been in business since 1989. If you're happy with your management company, great. If not, you can check us out on grsmgt.com. We'd love to provide a no obligation proposal to you. So big thank you to Jeff for putting this on. And with that being said, I'll hand it over to the lovely Kerstin at the K. Bender Rembbaum Tampa office.
Thanks, Courtney. Good morning, everyone. Yes, it's still morning. I'm Kerstin Henze with K. Bender Rembbaum. I manage the West Coast office for the firm, which is located in Tampa. But for those of you who are sort of all over the state, we do have, other locations. Our main office is in South Florida, and then we have offices in Palm Beach Gardens as well as in the Orlando area. We are an exclusive association law firm, so that means we represent primarily associations, your condos, your HOAs, and your co-ops. And I personally have been with the firm since 2010 and practicing law for 17 years. So a long time. All right, so let me try to pull up my slides here for a minute. Jeff, can you see them?
Yes, we do.
All right, let me start from the beginning. All right, so
Very
here
good.
the class is very it's very dense, not going to lie to you. There was a lot of legislation primarily affecting condominium associations. So there's just no way to summarize the changes that took effect July 1st of this year. So we have a lot of words, a lot of dense material. I'm going to try to get through them as best as you can. Definitely use these slides to review them at your leisure at some point after the fact. And we'll take questions at the end, okay? All right, so community association managers and management firms. So one of the changes that took effect July 1st is that any LCAM who has had his or her license revoked cannot have an indirect or direct ownership interest in or be an employee, partner, officer, director, or trustee of any CAM firm during the 10-year period after the effective date of the revocation. Okay, so your license has been revoked. You cannot be an employee or have any interest in any CAM firm for that 10-year period of suspension. This person is also ineligible to reapply for certification for a period of 10 years after the effective date of revocation. You'll see there's a pattern this year with with management firms and managers and associations creating certain types of accounts. So this one primarily refers to LCAMs and CAM firms. They have to create and maintain an online licensure account with the DBPR. The CAMs have to identify the CAM firm for which they provide management services, as well as identify which associations they're designated on-site on-site LCAMs. The managers must also update their online licensure account within 30 days of any change. And then CAM firms must also identify on their online licensure account the LCAMs that they employ. And if an LCAM has had his or her license suspended or revoked, the department will notify the firm, the CAM firm, as well as the association for which the LCAM performs management services. Okay. Professional standards for contract. Property managers are governed under Chapter 468 of the Florida statute. So the new changes include that LCAMs and CAM firms cannot knowingly perform any act that's directed by the association if that act violates any state or federal law. So just because a board member gives certain directions to the LCAM doesn't mean that the LCAM must violate state and federal law, okay? If an LCAM or CAM firm has a contract with the association that's subject to a milestone inspection requirement or the CEUs, the LCAM and CAM firm must comply with those requirements as directed by the board. So again, while the property manager has to take direction from the board, they still cannot violate state or federal laws. The contract between the association and either LCAM or CAM firm also now has to include a new disclosure, and that disclosure we've included here in italics. So every contract has to include this specific statement, which is the community association manager shall abide by all professional standards and record-keeping requirements imposed pursuant to Part 8 of Chapter 468 of the Florida statute. And then a contract between the LCAM and the CAM firm and an association may not waive or limit the professional practice standards that are required under Chapter 468 of the Florida statute. Okay, so additional duties have also been extended for LCAMs that perform services for condominium association. A couple of years ago, Chapter 468 of the Florida statute was modified to give to impose specific requirement on LCAMs that specifically manage HOAs, so communities that are governed under Chapter 720 of the Florida statute. For whatever reason, those specific requirements only apply to LCAMs that perform services for HOAs. This year, the statute was modified to now apply those same requirements to LCAMs that perform services for condominiums, okay? So the following requirements now applied essentially to all CAMs that perform services for condos and HOAs. So they have to attend at least one association meeting per year, and that's in person. They also have to provide to the members of the association and post on the association website the name and contact information of the LCAM that is assigned to the association, as well as provide to any member upon request a copy of the contract between the association and the manager or the management firm. All right, in terms of conflicts of interest between LCAMs and CAM firms, no major changes in terms of how, what constitutes a conflict of interest or, the procedure for the association, for the board to approve a contract with a property manager or LCAM firm that is subject to a conflict of interest. But there were some minor tweaks just to clarify really existing language, and those I've identified here with the underline. So an additional rebuttable presumption that a conflict exists was created. Now the rebuttable presumption that a conflict exists if an LCAM or CAM firm proposes to enter into a contract or other transaction with the association or enters into a contract for services other than association management services. So kind of clarifies existing language. Also, in lieu of listing the entities that may do business with the association for purposes of creating the rebuttable presumption, there's reference now simply to the word persons as defined in Section 1.01 of the Florida statute, which includes essentially individuals, children, associations, joint ventures, estates, trusts, business trusts, and any combination of that. So essentially, the way the provision reads, it's right here in the in parentheses, a rebuttable presumption exists if LCAM and CAM firms, including directors, officers, and persons with financial interest in a CAM firm or relative of such persons holds an interest in or receives compensations from persons as defined in Section 1.01 of the Florida statute. And then the word compensation in this sentence was also further defined in the statute. So it means any referral fee or other monetary benefit derived from a person as defined in Section 1.01 of the Florida statute, which provides products or services to the association, and any ownership interest or profit sharing arrangement with product or service providers recommended to or used by the association. That was a mouthful. Okay. Moving on, we're still on conflicts of interests with LCAMs and CAM firms. So last year or the year prior, there was a change in the statute that basically said that if the association receives or considers bids exceeding $2,500 for goods or services other than for association management services, which is or may be reasonably construed as a conflict of interest, then the association has to solicit multiple bids. Okay, so if your management firm provides you a bid for services other than in connection with management services and that service exceeds $2,500, you have to take multiple bids. The statute this year clarifies, however, this does not apply to matters that are disclosed in the management service contract as a conflict of interest within the meaning of the statute. Okay. If the LCAM or CAM firm proposes to engage in any activity that is a conflict of interest under the statute, then the proposed activity has to be listed on the meeting agenda of the board meeting. And the statute clarifies this year that the board meeting notice must include the description of the proposed activity, disclose the possible conflict of interest, and then include a copy of all contracts and transactional documents related to the proposed activity. Okay. And then if the board finds that the LCAM or CAM firm has violated the statute, that the contract is voidable, and then the association can terminate that management contract. If they terminate the management contract, then the association would only be liable for services rendered through the date of termination and would not be liable for any liquidated damages or penalties. All right, let's shift gears to mandatory structural inspections for condominiums. So in connection with milestone inspections, the statute this year clarifies that the milestone inspection applies to condominium buildings that are at least 3 habitable stories as determined by the Florida Building Code. So this was an effort to clarify for those condominiums that where the first unit, sits above the garage. It was unclear whether that that garage constitutes as part of the three stories. And so the statute this year clarifies that no, milestone applies to buildings with 3 habitable stories. The Board of County Commissioners or your municipal governing body must now adopt an ordinance requiring the association that is subject to the statute, the milestone statute, to then schedule or commence repairs for substantial structural deterioration within a specified time frame after the local enforcement agency receives a Phase 2 inspection report. Okay, so currently the statute 718 does not have a specific deadline within which repairs have to be commenced. That is now up to your local municipal governing body to institute. And then also a licensed architect or engineer, if they bid to perform a milestone inspection, they have to now disclose in writing to the association if they intend to also bid on any services related to any maintenance, repair, or replacement, which will be recommended in that milestone inspection. So you'll see later on in some of the slides the same, disclosure requirements for engineers and architects that will be doing that are doing milestones, and then as well, intend to bid on services related to milestone repairs. Continuing on with milestone inspections, a design professional or contractor who submits a bid to the association for performing services recommended by the milestone inspection cannot have an interest, whether directly or indirectly, in any firm or entity that provides the milestone inspection, or be a relative of any person having a direct or indirect interest in the firm, unless such relationship is disclosed to the association in writing. Okay, so the contractor or engineer are going to perform any repairs in connection with your milestone inspection. They have to disclose, any interest that they might have in the firm or entity that provided the milestone. A contract for services is voidable and then terminates upon the association providing written notice of termination. Notice terminating the contract if the design professional or contractor failed to provide the written disclosure of the relationship required under the statute. For your local enforcement agencies, on or before December 31st of this year, and then on or before each December 31st thereafter, your local enforcement agency responsible for milestone inspection must provide the department, that is the DBPR, in electronic format determined by the DBPR, the following information. So they have to now disclose the following: the number of buildings required to have milestone within the agency's jurisdiction, the number of buildings for which phase 1 inspection has been completed, number of buildings granted an extension of the date of which the initial milestone inspection must be completed, number of buildings required to have the phase 2 milestone inspection, number of buildings for which a phase 2 milestone inspection has been completed, so forth and so on. So you can read the rest of the list at your leisure. All right, so condominium associations. This is going to be more of some of the changes that affect basically operations, board governance. So video conference. This is a little of an outline of the slides that will follow. So just to kind of summarize what we'll be going over in the next few slides, essentially board meetings, membership meetings, whether it's annual or special membership meetings, can now be conducted via video conference, and we'll in the next few slides we'll see what that definition is. But just quick synopsis. Well, actually, let me just kind of go to the next slide, just in the interest of time. All right, so the statute defines what a video conference is, which means real-time audio and video-based meeting between 2 or more people in different locations using video-enabled and audio-enabled devices. Okay, so your Zoom or Teams meeting would qualify as a video conference. Whether or not you want to allow owners to participate via video conference, it's certainly, a business decision. It's up to you. You don't have to give them that option. But if you do, then the statute says that the notice of any meeting that will be conducted by video conference must include the hyperlink and a call-in conference telephone number for owners to attend the meeting. And there also has to be a physical location where the unit owners can attend the meeting in person. Okay, so it's not, you cannot have essentially virtual meetings without a physical location. Okay, you are now required to have that physical location. And it can be, whether it's a manager's office or the association office, if it's on site where the condominium is located. And you can have just, one board member or the manager there, but you still have to have that physical presence. And then all meetings conducted by video conference must be recorded, and the recording must be maintained as part of the official records. For material amendments to non-residential condominium declarations, so this applies only to non-residential condominiums, so basically commercial properties. If that applies to you, this has to do basically with changes to the configuration of the size of the unit and material changes. So I'll let you read that on your own. If an association contracts with an LCAM or CAM firm, the statute now says that the LCAM and CAM firm must possess all applicable licenses required under Chapter 468. Seems like, this logical, but I guess now it's codified. All directors or officers of an association that contract with LCAM or CAM firm have a duty to ensure that the LCAM and CAM firm is properly licensed before entering into the contract. And if the contract if a contract is between the LCAM and the association, and the LCAM had his or her license suspended or revoked during the term of the contract, then the association may terminate the contract by providing written notice. Okay. Official records. So in addition to all the other records that you are required to maintain under Chapter 718, you are now required to maintain these additional ones. So books or electronic records that contain the minutes of all meetings of the association, board, and committee, as well as any recordings of all meetings that are conducted by video conference. Okay. So yes, there are boards that, because they don't want to have to keep the recordings as part of the official records, just simply choose not to conduct meetings virtually, and that's fine. But if you do conduct meetings virtually, just know that those recordings will be part of the official records. If there are approved minutes for a meeting held by video conference, the recording of the meetings that are to be conducted by video conference must be maintained for at least 1 year after the date the recording is posted on the association website. Then you're also required to maintain accurate, itemized, and detailed records of all receipts and expenditures, including bank statements and ledgers. Okay. So just because this year's legislative change expressly identifies bank statements and ledgers that you have to maintain as part of the official record, doesn't mean that you didn't have that obligation before, right? It just clarifies that this obligation exists. And then copies of all affidavits required by Chapter 718, which we'll be discussing in the next few slides. The statute was also modified to now provide that a director or member of the board or an LCAM who willingly and knowingly or intentionally violates the official records inspection requirements commits a misdemeanor in the second degree and must be removed from office. So it used to be that there was also a requirement for the violation to have been repeatedly done, which means repeated meant at least 2 violations in a 12-month period. Well, the statute was changed to remove the word repeatedly, so that's no longer a requirement. As long as you willfully and knowingly or intentionally violate the official records inspection requirements, you commit a misdemeanor. In addition to maintaining adequate number of copies of your governing documents, as well as your Q&A or question and answer sheet, the association must also maintain the most recent annual financial statement, as well as annual budget. Okay. So for website requirements, the statute now clarifies that a document must be available on association's website or downloadable through a mobile device within 30 days of after the association receives or creates an official record. So there was no time frame before. Now you have 30 days within which to post that document on your website if you are required to have websites. In addition to the other official records that you are required to post on your website, if you're currently subject to website requirement, the association also has to post on its website the following documents: approved minutes of all board meetings over the preceding 12 months, video recording or a hyperlink to the video recording of all meetings of the association, the board, and any committee and unit owners which are conducted by video conference over the preceding 12 months, as well as a copy of affidavits required by Chapter 718. And also, as a reminder, January 1st of 2026, so it's just around the corner, if you're in a condominium that has 25 units or more, you will be subject to the website requirement come January 1st, okay? The current threshold is 150, so current website requirement only applies to associations with 150 units or more. That's going to change come January 1st, so be prepared and start getting ready to have that website created. All right, financial reports. This refers to your end of year financial report that associations are required to create. And the level or the type of financial report will be based on the annual revenue of the association. Well, every year the association is required to provide owners a copy of that financial report or a notice of its availability, letting owners know that, hey, this financial report is completed, it's available, and will be provided free of charge. That time frame used to be 120 days after the end of the fiscal year, or whatever date is provided in the bylaws. This time frame changed effective July 1st. So now associations have 180 days to provide a copy of that financial report or notice of its availability. Okay, so giving you a little bit more time, or at least your accountant to complete this financial report. And then if an owner requests a copy of the report, then you need to provide it either by mail, hand delivery, or you can electronically transmit it via email if to those owners who have consented to receiving notices electronically. And then the other change to the statute is that evidence of compliance with this delivery requirement must be made by an affidavit executed by an officer or director of the association. So this is one of those affidavits that you are now required to maintain as part of the official record and then post it on the website if the website requirement applies to you. Additionally, with regard to financial reports, if approved by a majority vote of the voting interest, the association may now prepare an alternate report in lieu of your compiled, reviewed, or audited financial statement. So the membership approval threshold used to be a majority of quorum. Now it's a majority of the voting interest. All right, investment of association funds. The board shall, in fulfilling its duty to manage operating and to manage operating and reserve funds of the association, must now use best efforts to make prudent investment decisions that currently consider risk and return in an effort to maximize returns on invested funds. Bottom line, folks, I mean, I don't know that, board members are, financial experts or investment experts. So just be sure to talk with your financial investment advisors before you invest association funds. Additionally, an association, including a multi-condominium association, may invest reserve funds in one or any combination of certificates of deposit or in depository accounts at a community bank, savings banks, commercial bank, savings and loan associations, or credit union without a vote of the unit owners. Okay. Board meetings, again, this is just kind of a recap that if you are going to allow video conference attendance at board meetings via video conference, you now have certain requirements, including that you need to have a physical location for that meeting and you have to record the virtual meeting. For membership meetings, the statute now says that if the bylaws do not provide the location for the annual meeting, then the annual meeting has to be held within 15 miles. It used to be 45 miles, but now it was reduced to 15 miles of the condominium property. Again, membership meetings can also be conducted in person or video conference. And if the annual meeting is conducted via video conference, then the statute requires that a quorum of the board must be physically present at the physical location where the unit owners can attend the meeting annually. Okay. So this requirement to have a quorum of the board present at the physical location of the meeting seems to apply only to annual membership meetings, not board meetings, and not any other type of special membership meeting. You also have, again, the requirement to record and then keep this recording as part of your official records. All right, budget meetings. There was a substantial change to adoption of budgets. So it used to be, if many of you recall, that the board adopts the budget, and then if the budget for the next fiscal year exceeded 150% of assessments from last year, so there was a 15% increase from last year's budget, then owners had the opportunity to propose an alternate budget and have the alternate budget adopted. Okay, that's what the statute used to say. I've never in 15 years of practicing law ever seen a membership do that correctly. In any event, the statute was now changed to completely remove that option. And what the statute says now is that if a board proposes in any fiscal year an annual budget which requires assessments which exceed 115% of assessments for the preceding fiscal year, then the board must simultaneously propose at the budget meeting before adopting the annual budget a substitute budget that does not include any discretionary expenditures that are not required to be in the budget. I don't know about you. I mean, I personally have not seen a budget that has discretionary expenditures, but be that as it may, if your budget's going to exceed last year's budget by 115%, that you have to now simultaneously propose an alternate budget for a membership consideration, which does not include discretionary expenditures. Now, in determining whether the budget exceeds the 115% over prior year's budget, the following items are excluded. So you're not going to count that towards your 150% increase. Reserves for repair and replacement of condominium property, your structural integrity reserves, and then insurance premiums. Okay, so this is just a little synopsis of what I just discussed. Unit owners must then consider and may adopt the substitute budget prior to the board's adoption of the budget that exceeds the 115% threshold. And then an adoption of the substitute budget requires the affirmative approval of the majority of all of the voting interest unless a higher percentage is required by the bylaws. If the substitute budget is not adopted by the membership, then the annual budget previously initially proposed by the board may be adopted. And then at least 14 days before the budget meeting in which the substitute budget will be proposed, the board must hand deliver or mail to each owner a notice of the meeting. Okay. All right. Reserves and STRS funding. So again, this is kind of a little bit of a recap of what we'll be discussing in the next slide. So you can read that at your leisure. Let's kind of go to the meat of the slides. Okay, for reserves. So one of the categories of reserves used to be that you have to maintain a non-STRS reserves for roof replacement, paving, painting, and then any other deferred maintenance expense or replacement costs that exceeded $10,000. That $10,000 threshold has now been increased to $25,000 or the inflation adjusted amount as determined by the division. Okay. So the division of condominium is now annually adjust for inflation based on the consumer price index, which will be released January of each year. Okay, So by February 1st of 2026, and then annually thereafter, the division will and must conspicuously post on its website the inflation-adjusted minimum threshold amount for required reserves. So just be on the lookout for that for the next year. Membership approval is no longer required for the board to pause the contribution to its reserves or to reduce reserve funding if the local building official determines that the entire condominium building is uninhabitable due to a natural emergency. So if that was the case, then you needed to get membership approval to pause or reduce reserves. That's no longer required. It's a board decision. Association reserve accounts may be pooled for 2 or more required components. However, the statute does now say reserve funding for CEUs components may only be pooled with CEUs. So you can pool your CEUs components together, and you can pool your non-CEUs reserves, but you cannot pool the CEUs with non-CEUs together. Okay. The reserve funding on your identified on your proposed annual budget must be sufficient to ensure that available funds meet or exceed the projected expense for all components in the reserve pool based on the reserve funding plan or schedule of the most recent CEUs. And then the statute also clarifies that a vote of the membership is not required for the board to change from pooling to straight line method, or if you were doing straight line method accounting for your reserves and you want to switch to pooling method of reserves, a membership vote is no longer required to switch. If an association votes to terminate the condominium in accordance with Chapter 718.117 of the Florida statute, members may vote to waive the maintenance of reserves recommended by the association's most recent CEUs. CEUs reserves can also now be funded by not only regular assessments, but also special assessments, line of credits, and or loans. And if you are going to fund your CEUs reserves through a special assessment, a line of credit, or a loan, then the statute says and requires the approval of a majority vote of the total voting interest of the association. The special assessment or the line of credit or loan that is secured for the purpose and related details must then be included in your annual financial statement. A unit-owned controlled association, so this is post-developer control, that must have a CEUs may secure also a line of credit or loan to fund the actual capital expenses required by the milestone inspection or CEUs. Okay. Now, this does not apply to a developer control association, an association in which the non-developer unit owners have been in control for less than a year, or an association controlled by one or more bulk assignees or bulk buyers. Now, that line of credit or loan has to be sufficient to fund the cumulative amount of any previously waived or unfunded portions of the reserve funding amount and the most recent CEUs. And the funding from the line of credit or loan must be immediately available for access by the board to fund the required repair, maintenance, or replacement expenses without further approval by the members of the association. Okay, additional provisions regarding the funding of CEUs reserves. So for any budget that is adopted on or before December 31st of 2028, if the association has already completed the milestone inspection within the previous 2 calendar years, then the board, upon the approval of a majority of the voting interest, may temporarily vote to pause for a period of no more than 2 consecutive annual budgets, the reserve fund contributions, or can reduce the amount of reserve funding for the purpose of funding repairs recommended by the milestone inspection. So you would only be taking this vote if you're going to be essentially funding repairs recommended by the milestone inspection, okay? And you get membership approval, and you adopt this on or before December 31st of 2028, okay? This does not apply to developer-controlled associations or an association which the non-developer unit owners have been in control less than a year. And an association that has paused reserve contributions must have the CEUs performed before the contribution of reserve contributions in order to determine the association's reserve funding needs and to recommend a reserve funding plan. So if you're going to pause or you're going to reduce your reserve fund, your CEUs reserve funding, based on the first bullet point for purposes of making repairs in connection with your milestone requirements, then you will have to have a CEUs basically updated, okay, before you start funding the CEUs again. In connection with your CEUs, the statute also clarifies that the CEUs applies to condominium buildings, at least 3 habitable stories as determined by the building code. The statute also now updated the deferred maintenance expense or replacement cost requirement from $10,000 to $25,000. So that was the catch-all provision. So in addition to maintaining CEUs for the specific items set out in the statute, you also now have to maintain CEUs reserves for any deferred maintenance expense or replacement cost that exceeds $25,000 or the inflation-adjusted amount determined by the division. In preparing the CEUs, a CEUs including now the visual inspection portion of the CEUs has to be performed only by a licensed engineer, licensed architect, or any person that's certified as a reserve specialist. At a minimum, the CEUs must include a recommendation for a reserve funding schedule based on baseline funding plan that provides a reserve funding goal in which the reserve funding for the budget year is sufficient to maintain the reserve cash balance above 0. So obviously these are conversations you're going to have with your CEUs reserve specialist. The CEUs may recommend other types of reserve funding schedules, provided that each recommended schedule is sufficient to meet the association's maintenance obligations. And then if your CEUs does recommend reserves for any item that is not a CEUs component, right? So for example, your elevator replacement, that's not necessarily outlined in the statute, but if your reserve specialist recommends that, the amount of the recommended reserve for such item must be separately identified in the CEUs as an item for which reserves are not required under the CEUs. The CEUs must take into consideration the funding method used by the association to fund its maintenance and reserve funding obligations through regular, special line of credit, special assessments, line of credits, or loans. And then if the CEUs is performed before the association has approved a special assessment or secured a line of credit or loan, the CEUs must be updated to then reflect that funding method selected by the association and its effect on the reserve funding schedule. The CEUs may be updated to reflect any changes to the useful life of the reserve item after such items are repaired or replaced, and the effect that such repair or replacement will have on the reserve funding schedule. The association must obtain an updated CEUs before adopting any budget in which the reserve funding from regular or special assessments, line of credit, or loans do not align with the funding plan from the most recent version of your CEUs. In addition to all the previous exceptions for CEUs, the statute clarifies that the CEUs is also not required for 4 family dwellings with 3 or fewer stories above ground. Excuse me. The timeline for preparing the CEUs has also been extended. So now the CEUs must be completed by December 31st of 2025. So that's still around the corner. So make sure you get that done. If the association completes the milestone inspection or an inspection that's completed for a similar local requirement, the association may delay performing the required CEUs for no more than 2 consecutive budget years immediately following the milestone inspection in order to allow the association to focus its financial resources on completing the repairs and maintenance recommendations from the milestone inspection. All right. So that delay in performing your CEUs is only, it's limited for 2 consecutive budget years. And you would only be able to delay doing your CEUs if you're actually going to spend your funds and actually undertaking repairs in connection with your milestone. Okay. So it's very limited circumstances. An officer or director of the association must also sign an affidavit acknowledging receipt of the completed CEUs once it is completed. And the division has to now adopt by rule the form for the CEUs in coordination with the Florida Building Commission. We've kind of touched upon these conflicts of interest in connection with the CEUs. So any design professional or licensed contractor who bids to perform the CEUs must also disclose in writing to the association the intent to bid for any services that are essentially related in connection with the CEUs. So I'll just skip over that. In terms of hurricane protection, last year we saw a lot of changes regarding hurricane protection. This year there were really only 2 that just clarify what's already existing. Essentially, last year, the major change was that if the association had to remove any hurricane protection, such as hurricane shutters, in order to complete repairs to common elements that the association is required to do, then the cost of the actual removal and reinstallation of that hurricane protection was going to be an expense of the association. That's what the statute said last year. How this plays out in the real world is if, for example, the association has to do concrete repairs and owners have installed shutters over the years and those shutters had to be removed, then the cost of the removal and reinstallation of the shutters was an expense of the association. This year, the statute basically clarified that unless otherwise provided in the declaration as originally recorded or as amended, that cost would be on the association. So essentially, if you want to shift that cost to remove and reinstall the hurricane protection on the owners, then you will have to consider an amendment to your declaration. In terms of evacuations, in the event of an evacuation order, whether it's mandatory or voluntary in the locale where the condominium is located, the board can require the evacuation of the condominium property. And if you do require the evacuation, if an owner or other occupant fails or refuses to comply with the board's evacuation requirement, then the association is immune from liability or injury to persons or property arising from the failure to evacuate. Electronic ballot voting. So first, in terms of electronic voting, the statute was modified to now to no longer require a 14-day notice for the board to notice a meeting at which it's going to adopt a resolution to institute electronic voting. So that means that if you as a board, if you haven't yet instituted e-voting for your association, your condominium, and you want to do that, all you need to do is post notice of the meeting at which you're going to institute e-voting at least 48 hours prior to the meeting. Okay. Now, the statute also now says that if at least 25% of the voting interest of the condominium petition the board to adopt a resolution for electronic voting for the next scheduled election, the board must hold the meeting within 21 days after receiving the petition. If the petition is received within 180 days after the date of the last scheduled annual meeting. So essentially, the statute now gives owners the opportunity to petition the board to institute electronic voting for their next scheduled election, provided they meet this time frame within which to present the petition to the board. If the board ends up instituting e-voting, essentially that e-vote can be used for really any issue that is presented to the membership for approval. Now, the following change to the statute concerning electronic ballot voting, this will apply to condominium associations that have not yet adopted e-voting, electronic voting. Okay, so this only applies if you have not adopted electronic voting. So unless the association has adopted electronic voting, the association must designate an email address for receipt of electronically transmitted ballots. You're now required to designate an email of your choosing to receive the following electronic ballots. So a unit owner may now electronically transmit a ballot to that email address designated by the association without complying with the rules providing for the secrecy of ballots. Okay, so for elections, condominium elections, as many of you know, that election ballot has to be transmitted via the inner and outer envelope system. So you put the ballot in the inner envelope goes in the outer envelope, and the outer envelope has to be signed, as well as the owner or the voting rep has to designate the unit address on the outer envelope. So that system was created to maintain secrecy of the ballot, right? So now owners, if you haven't adopted electronic voting, owners have the option to vote by transmitting a ballot electronically to this email address. Okay, so they have the option to waive the secrecy of their ballot. The association has to count the ballot that is transmitted to this email address as long as the ballot contains the following information, which is these 3 bullet points. So the ballot has to have a space for the owner to type in his or her unit number. There has to be a space for the owner to type in his or her last name, first and last name, which also functions as the signature of the owner. And you have to include the statement that is in bold at the bottom of this page. Essentially, waiving the secrecy of your ballot is your choice. You do not have to waive the secrecy of your ballot in order to vote. By transmitting your completed ballot through email to the association, you waive the secrecy of your completed ballot. So if you do not wish to waive the secrecy of your ballot but wish to participate in a vote, please attend the in-person meeting at which you can vote. Okay, so it needs to have these 4 things in order for you to accept that ballot. And the owner has to transmit this completed ballot to the email address no later than the scheduled date and time of the meeting during which the matter will be voted on. And there's a rebuttable presumption that an association has reviewed all folders associated with the email address designated by the association to receive ballots if the board member, officer, or agent of the association or an LCAM provides a sworn affidavit attesting to this review. Unclear how this is gonna, work in the real world. So if the real, moral of the story is you really should be considering instituting electronic voting for your community. Okay. Switching gears, the authority of the Division of Condominium has been further expanded. So the division used to have very limited jurisdiction to review really only 3 issues: disputes concerning elections, official records, and then financials. Over the years, that jurisdiction has been increased. And in this year's legislative changes, the division's jurisdiction has been increased to issues concerning your milestone inspection, completion of repairs required by milestones, requirement of the association to maintain an insurance policy or fidelity bonding, as well as matters concerning condominium board member education requirements, and reporting requirements for your CEUs. Okay, so owners can now file a division complaint with the division for any of these issues, and the division will take jurisdiction and investigate. And if you're found in violation, you will likely be subject to monetary penalties. All right. There is also a requirement for the association to create an account with the division. So on or before October 1st of 2025. So this deadline has since passed. So if you haven't done this, make sure that you get on it. So by October 1st, all associations must have created and are required to maintain an online account with the division and provide information requested by the division in an electronic format. The division may require the association to provide such information no more than once a year, except that the division can require you to update that into any information within 30 days after any change. And the division has to provide the association at least 45-day notice of any requirement to provide any information after the association initially creates the account. So we've provided here the email address where you can contact the division if you need assistance with setting up your online account. And then this is the information that the association now has to disclose. Essentially, very basic association contact information: name, physical address, mailing, email address, and phone numbers of the association, the total number of stories, total number of units, the age of the building, the amount of assessments or special assessment by unit type, including reserves, and the purpose of the assessment. So you can read this requirement at your leisure. All right, and then in the interest of time, just a few changes to my Safe Florida Condo program, although my understanding is there's currently, believe no, let me see here. Just some changes to the voting requirements. There is a backlog though, so go on the website. And you can actually sign up, my understanding, just to receive updates and when the backlog will be, when they can get to you. So, all right,